Are you thinking of buying a condo? In this video, I'm going to talk about 10 things that you should know before making your purchase. I'm Rick Shorter, real estate broker and owner of Kid Brooklyn Realty Group and a mortgage loan originator. I help clients to find and finance their dream homes, and I'd like to share a few of the things that my clients and I talk about during the condo buying process. Before we get started, give this video a thumbs up so that I know that you like to see more of this type of content in the future. It's not uncommon in today's market to think that property ownership is outside of your reach. Have you been shopping for a home only to find that prices are too high or competition is too tough? Well, before giving up on your dream, consider a condominium. Condos are becoming an increasingly popular choice. Condos offer some unique features such as low maintenance, community amenities, and oftentimes great location. Let's explore 10 important things to consider before buying a condo. Number 1, what is a condo? Condo is short for condominium. According to Merriam-Webster Dictionary, a condo is a unit in a multi-unit structure such as an apartment building or land owned in common such as a townhouse complex. A key thing to remember is that condo owners own their individual space as well as having access to common areas and amenities shared among the units in the same building or complex. The amenities can be pretty luxurious such as swimming pools, golf courses, gyms, and spas, but what's even better, you don't have to take care of the upkeep of the common areas yourself. So for many residents, living in a condominium is like living in a resort. Number 2, what is the condo association and what does it do? All condo unit owners are automatically granted membership into the association. The condo board is a governing body elected by owners and is responsible for the regulating and maintaining of the complex according to the association rules and regulations while adhering to state and federal housing law. Additionally, they're responsible for upholding standards in common areas and collecting appropriate fees from owners to cover the cost of maintaining the association. In short, think of the condo board as the condo government. Number 3, what is a Hopa condo versus a non-Hopa condo? Before signing a purchase agreement on a condo, it's essential to be aware of the distinction between a Hopa condo, Hopa being short for Housing for Older Persons Act of 1995, and a non-Hopa condo. Condos that have a Hopa designation require that residents be at least 55 years of age to live in the complex, while those that do not have a Hopa designation do not have an age restriction. Number 4, financing a condo. Let's talk a little bit about the money behind buying a condo. Paying cash for your real estate purchases is a great option, but for most buyers, especially first-time home buyers, paying cash is just not an option. So what do? The answer, other than a really rich uncle someplace, is a mortgage. When purchasing a condo to live in, there are 3 main types of mortgages: conventional, FHA, and VA mortgage. The conventional mortgage is the most popular loan for condo purchases and may require as little as 3% down payment. The VA, the Veterans Administration loans, are available to veterans and can be as little as 0% down payment, while the FHA, the Federal Housing Administration loans, are government-backed loans that can offer down payments as low as 3.5%. But here's the kicker. Unfortunately, most condos in South Florida won't qualify for the FHA or VA loans and will require as much as 20 to 25% down payment. It's important for you to know that fact so that you're prepared. Number 5, what's a non-warrantable and warrantable condos? Here's an insider tip. To make a decision on whether to fund your mortgage and the down payment amount needed, lenders analyze the warrantability of condos. So what does that mean anyway? A warrantable condo is one that meets the minimum standards set by Fannie Mae or Freddie Mac for lending institutions and can be financed with a regular mortgage and are deemed less risky. On the other hand, a non-warrantable condo does not meet the guidelines for the lenders and are considered more risky but could still be purchased with a mortgage but may require a higher down payment. How do you determine if the condo is warrantable or non-warrantable? Your chosen lender will be able to indicate the warrantability of the condo. Just ask. Number 6, the application process. So you found the perfect condo, the seller has accepted your offer, now what? Every association has the right to approve or reject any potential buyer, as long as the association is compliant with federal fair housing policy in their judging criteria, which means the application process can't be discriminatory. Becoming a condo owner may involve meeting certain financial qualifications though. Many associations require applicants to possess a minimum credit score, income level, while others may mandate the minimum earnest money deposit percentage. Number 7, earnest money deposit versus the down payment. Do you know the difference between the earnest money deposit and down payment? Earnest money is a buyer-provided deposit demonstrating their commitment to purchase the property, while a down payment represents how much capital you must put toward your loan for the lender to accept it. Number 8, monthly condo fees. When buying a condo, it's important to be aware of the monthly fee. Generally speaking, each unit is required to pay a fixed monthly fee that helps cover expenses such as exterior maintenance, landscaping costs, and insurance premiums. These fees may differ from complex to complex and can be raised by the condo board voted approval. No one likes them, but condo fees are essential for the upkeep of the property and your property value. Number 9, what are reserves? Think of reserves as the savings account for the association. The reserves are generally intended for significant repairs or upkeep of the condo, such as roof repairs or replacements, pool resurfacing, or building renovations. As a rule, lenders typically view associations more favorably if they have at least 10% of their overall budget in reserves and can affect the warrantability of the condo, which means if a condo has less than 10% in reserves, your down payment may be higher. So it's important in the evaluation process to ask about the condo reserves. Number 10, special assessments. If a condominium does not have enough reserve funds in place to cover an emergency repairs, chances are the association will require owners to contribute additional funds if an unexpected repair occurs. These additional funds are called a special assessment. Special assessments don't just appear. There's a process, and the condo board votes on them, and the owners are notified. All owners are held accountable for their share of the cost, and special assessments are typically paid off over a set period of time. If assessments remain unpaid by the unit owner, legal action may be taken, including the F word, foreclosure. Therefore, it's essential that each owner be aware and pays the assessments to avoid any potential repercussions. Congratulations, now you know everything there is to know about condos. No, just kidding. We only covered the basics. But even with the basic understanding of condos, you should be able to decide if buying a condo is right for you. Don't forget to ask questions and shop around for the condo of your choice. If you have any questions about condos that I didn't cover, please leave them in the comments below, and I'll do my best to answer them. Happy condo buying.